Okay, seems like I managed to answer all your question. Okay, maybe give you since we have some time, right? Give you some view of sharing view, some of my view on the market. Okay, just yesterday, there was a pretty significant bounce from the stock market. Okay, FX is always up and down, up and down, up and down, right? So it's nothing special, but FX stock market recently we have a huge fall. Then yesterday we saw quite a significant bounce as well. Whether is it a full recovery? Okay, that means whether are we going to see the bottom of the stock market? I'm referring to the US market, right? S&P, and of course Nasdaq, Dow Jones. Are we seeing the bottom of it right now? Might not be the case. Why? Because in my view, that the whole entire sentiment is still more towards the fear. Which is where the COVID-19 is affecting the market sentiment, the consumer confidence, the investor confidence, and things like that. Unlikely we're gonna see the bottom right now. Okay, unless suddenly there's a cure to it, and then that global economic activity starts to pick up, right? And then that might be the part where we see the bottom of the financial market, bottom of the drop in terms of the stock market. Okay, but I feel that right now is probably just some sellers probably decided to take profit, and then price starts to go up, or some big investors are just buying up. Some hedge funds are just accumulating. Okay, so accumulation means they probably have different levels of acquiring. Okay, and maybe this might be one of their levels in acquiring, and then that kind of like push the stock a little bit higher. Okay, so I just want to share with you. Okay, one key level that you might want to pay attention to in S&P would be the 2700 level. Okay, 2700. So what I'm seeing over here is that maybe in this week, okay, it might have the possibility of continuing to push higher. Okay, but pay attention to the 2700 level for S&P. Okay, because we'll monitor how price actually react at the 2700 level. Okay, now that is a key level, because if price can actually break out of that level strongly, right, impulsively, we might then see the bottom of this whole fall. Okay, but of course, if price got rejected very strongly from the 2700 level, there's a very high chance that we might see another drop, right, in the stock market. Okay, so this here, what I want to share with you is that if today you are looking to buy into it, okay, don't go full capital into investing all the stocks that you want to invest yet. Okay, do that in batches, which means that maybe it'll be a good time to go in for the first batch. Okay, and then if it rallies, you can start to scale in accordingly. If it drops further, then at least you still have some capital and bullets left to go in again. Okay, so that's the idea of investing. There's no leverage, there's no stop loss, but basically you want to pick up good levels and start to buy into those stocks that you have actually shortlisted. Okay, so for me, I've actually started to go in the first batch. Okay, so for me, I actually split it into 5. So I would have 5 levels. This is just the first level I started to put in, and usually the first level is the smallest level for me. Okay, and of course, if it starts to go up and then I see confirmation to it, I'll add on to it. Okay, if it drops, then I know that I still have tons of bullets left, okay, to actually fire into the market. Okay, so this is my view. Okay, just to share with you that don't get too excited because of yesterday rally. Pay attention to the level of 2700 level for the S&P. See how price react at that level. Okay, Hardy has another question. Are you more interested in shorting or longing SPX, which is S&P500 index? Is the rally a retracement for short term or long term? All right, cool. I don't personally trade the index. When I do when I'm into stocks, I'm more of like just invest. Okay, and I don't invest into index. I invest into selected companies that is focusing on dividend growth, which means that over the period of time, there's a high chance that the dividend payout from this company will keep increasing. And of course, stable companies that I'm looking at. Okay, but to answer your question on SPX, right, I'm also monitoring the chart of SPX. If I recall correctly, last Facebook Live, which was I think 1 week ago, we talked about the potential of it reaching close to 2,700. Okay, right now it's at 2,006, which is fairly close to the level that we shared. I feel that this might not be the rally yet, but it's likely a retracement. And one of the factors that I'm monitoring is not really just the stock market prices, but I would say whether this whole COVID thing is gonna be better. Again, back to the question of business confidence. Is this whole lockdown that's happening globally, is it going to be extended? Is it going to be better? Or is going to get worse off, right? When things gets worse off, then I feel that SPX would likely still fall, along this period. Why? Because businesses don't pick up. Companies is definitely going to be affected. When companies are affected, it will be passed down to the people and things like that, and there will be fear coming in, the second wave, the panic coming in, and the sell-off might likely also follow suit. Okay, so again, depends really on the COVID situation, but I'm seeing right now is that there's still that possibility of still going up a little bit for the SPX towards the potential level of around 2,700. That will be the key. And of course, if the price of SPX really breaks through that 2,700 level strongly, I feel that then it might be really the start of a deeper rally. Okay, but if we see the slowdown of price reaching 2,700 and a rejection from that area, likely we can see another low in the US S&P market. Okay, so that's my view on it. Alright guys, just wanted to do a very quick sharing on the current S&P 500 analysis. Now, for the past two Facebook Live sessions that we have done since the late March period, I've been sharing with all the audience during this Facebook Live that keep a lookout on the price level of 2,700 on the S&P market, right? And that price has a very high probability of hitting there. And once it reaches around that area, that's where you want to pay very close attention to the S&P market, right? And why we use the S&P market, but the whole idea here is because the S&P market is basically one of the global equities index, and most of the time the other equity index like your Dow Jones, Nasdaq, even let's say some of the Asia equities market tends to move pretty much similar to the US equity market, right? And therefore I'm just using the S&P as one of the equity index to kind of like do the analysis for kind of an overall global trend. Alright, so why I want to shoot this video over here, because since the last 2 weeks Facebook Live that the sessions that we have done, right now price is trading pretty close to it. We are now around 2,650, and I thought it would be a good time to actually update this view on it and to share with you some of the possibilities and key points to monitor as well. Okay, so over here what you can see on this chart is basically a 1 hour chart on the S&P market, and what I'm seeing over here is that price indeed has rallied since the start of April pretty strongly to the upside. Okay, but many investors and even some of the traders actually have in mind this question: is this the rally? Is this rally genuine, or is this just a dead cat bounce, a relief rally, or is this just a retracement for further downside? Okay, and of course over here there are many factors that can really affect the market, but I would like to just share in the perspective of a technical point of view, which means technical analysis using the concept of Elliott wave to forecast and analyze what is the likelihood of price movement in the S&P market. Okay, so over here, a very quick one, what we can see is that this entire move is pretty much a correction since late March. Okay, and since mid-March, somewhere around 23rd of March, right, we saw the very sharp bounce to the upside, and that itself is an impulse move. Okay, and we have since been just going sideways. Okay, and this part here you can see is that the recent price movement has also broken the top, but does it mean that it will immediately hit higher? Not necessary. Okay, so there are a few things I would like to share with you in terms of the possibility of what can happen. Okay, there's of course the number one possibility is from here it make another drop. And if that happens, then and it's happening in a very strong manner, very strong in momentum, and there's an impulse move to the downside around this region, okay, then likelihood of us seeing the bottom again at around 2170 area, the probability is very, very high. Okay, so if we see an impulse move to the downside, then very high chance we'll see another move going back to the previous low. Okay, and definitely if you see this, that's not the time for you to buy it yet. Okay, so that's one possibility that we need to prepare for. And of course, at this key area here, there's another possibility that price just do a very small sideways movement, basically ranging around that 2650 area. Okay, and we see that then we have a high possibility of price reaching another high. Okay, this time round it can potentially hit all the way back up towards the 3130-ish area. Okay, and if you see this sideways movement for maybe the remaining for this week, okay, or maybe a couple of days of just correcting and not going anywhere, it's just going sideways, then there's a very high possibility we'll see another push to the upside on the S&P market towards 3100 level. Okay, that's the second possibility. All right, so there's one more possibility that we want to also pay attention to of what can potentially happen. Is in the video on the Facebook, right, we talk about this level of 2700. Okay, somewhere around there. So there's another possibility that price from here keep moving up, but it's moving up in a very, very slow manner, which means that it might take a couple of days, from 2006 to hit 2007. Okay, and when we see this kind of pattern setup, right, basically like a diagonal, if I do it properly, it looks something like this. Then be also very cautious, because it means that there's a high possibility we might see a move to the downside. Okay, and if you see that S&P market is crawling up towards the 2700 in a very, very slow manner, don't jump into a buy trade. Okay, and of course I'm not saying that you sell it, but don't jump into a buy trade. Okay, so if today you are holding on, perhaps you have entered somewhere below and you're holding on to a profitable trade, right, by all means just manage that trade and hold on to it, and of course if you see a sideways correction, that's a favorable scenario that we'd like to see for price to keep going up and higher. Okay, but don't be surprised that we can also see a very sharp move down here, and from there we might hit lower for the S&P. Okay, and of course alternatively is that from here it continues to go higher and it goes in a very slow manner, then there's again that possibility of it dropping back to the downside. Okay, so here's a very quick one to share with you the updated view on the S&P market, and kind of like representing the global equities market as well, in a way. Okay, and I'd like to shoot this up simply because we are already very near the 2700 level since we talked about it for the past 2 weeks. Okay, so again, if you have any questions, don't hesitate to drop it in the comment section below. Okay, and I'll be more than happy to answer you as best as I can, based on my own experience and insights into the finance market and about trading investment. Alright, so with that, wish you guys all the best, and do pay attention to the S&P market.